Hey, Bill Soriano here, and if you like my videos, please remember to hit that subscribe button, like the video, and add a comment down below if it's relevant. If you have a question, I'll answer it for you. So leave a comment down below. Tell me what you like about the videos, what you don't like. I know I'm not the best at making these videos right now, but that's kind of why I keep making them to see if I can get any better at it. And by making the videos and showing you what I'm doing, it helps me learn and it helps me get better as well. So that's why I do it. So I'm not really qualified to give people investment advice. I just basically uh I'm just showing you what I learned uh by joining the company that I'm with and the trading community that I'm in. Um, I'm just passing the knowledge off that the live educators are giving to me in the live training and the recorded training that I watch. And I like the smart money. I like the supply and demand zone. I like trading from higher time frame supply and demand zones, like the 4 hour. And so that's all I'm passing on you. I'm just in the recap videos that I make, I'm just showing you past results. I'm not trying to give you any signals. I'm not doing that. That's not the purpose of this. And again, you should always trade this strategy when you start to implement it. You should always do it on a demo account. I show you my demo account. That's what I'm doing it on as well. And the purpose is eventually to get good at it so you can then take a funded challenge, get a funded account, and then you can trade with other people's money and you have access to more money. And then when you make those 2, 3, 4% gains, during the week, that's a lot more money that you're making, right? Than if you're trying to build and grow a small account yourself. So just wanted to get that out of the way. That's my disclaimer. I'm not qualified to give you any investment advice, and that's not what this is here. Yeah, forex trading is risky. You can lose all or part of your capital. So that's why you trade on demo. And that's why the goal is to eventually pass a challenge to get a funded account so that you're trading with other people's money. So this is just a kind of update to the supply and demand uh, intro video that I posted on YouTube. I'm going to put these on my website here. I'll kind of put them all together because this is a little, I guess you want to say a little update to this. I just kind of want to give you what we're looking for on the 4 hour time frame when we're looking for structure. Just want to give this to you again. And I did make a couple changes here to the trade plan, so I want to go over that with you as well. And that is basically we're looking for the pairs that are trending on the 4 hour time frame. Okay. So we're looking for basically continuation trades. And if we can't find a clear trend on the 4 hour, then we don't want to trade that pair this week. Okay. Just don't worry about it. Don't mark up that chart. There's no clear areas for you to trade from. You can't really identify a clear trend bias on the 4 hour. You just don't trade that pair this week. So when you look at how this works here, you have the trend moving up, you're getting breaks of structure, right? You're making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high, comes down, makes that higher low. But then what happens is right here, price fails to make the higher high, and then you get this break of structure to this low. This low gets taken out here. And this is a break of structure, but we call this a change of character, right? So it's a break of structure, but because it's a break of structure against the previous trend, we call this a change of character or a choke. Okay? I think I spelled that right. I'm not sure. I think there's too many O's in it. It's just one O. Choke. Change of character or choke. Okay. And so this area here is where people may do reversal trading, right? From this zone here. Maybe they do reversal trading from this zone here, or maybe they would do reversal trading from this zone here, right? But what we want the continuation trades. So we want to see the break of structures, and then we want to look for trades from these areas here, right? We want to identify our demand zones on the way up from these areas here, right? And then when we get this change of character here, that's telling us that the trend may change, right? Doesn't have to, but it may. In this case, we get a lower high and then we get a lower low. So in this case here, the trend has now changed because we get this second break right here, right? And so that's labeled like a break of structure. Same thing this change of character is. It's just we call it a change of character since it's a break of structure against the previous trend. Now, what's important to know is when this makes this lower low here, since we don't get a new high, this low is nothing. This low means nothing. So you don't get a change of character when this low gets taken out. You don't get it there, right? Because there wasn't a new high made, okay? So this low here just kind of means nothing to you, right? Okay, what the heck I did there. So anyway, we want to trade these continuations. And so you want to ideally when you come to the chart, you see something recent, your recent structure looks something like this, where price is moving up, making higher highs, higher lows, higher highs, higher lows, or price looks something like this, where price is making lower highs and lower lows, lower highs and lower lows, and you can look for your demand zones here, or I'm sorry, your supply zones here to trade from, like that one there, this area here, right? This area here, right? And so hopefully that's what you see when you come to your 4-hour chart. If you can't see a clear trend bias, then you just don't trade that pair this week. Now here's just to, again, just to go over the trade plan here. The trade plan is to trade with the 4-hour market bias, right? Once we have that, we identify a valid 4-hour supply or demand zone, right? When price hits that zone, you can then drop down to the 1 hour or the 15-minute, or you could just wait for your confirmation on the 4-hour time frame, right? Okay. So regardless of what you do, you wait for the confirmation now, which is a change of character, right? Once that happens, you identify your refined zone now, whether you're on the 15, the 1 hour, or you stayed on the 4-hour to do that. And that's where you set your limit order at. Okay. Now, the rules for these supply and demand zones is you have a consolidation that leads to a impulse candle, right? You see an impulse candle, that impulse candle leads to a break of structure. It leaves an imbalance. The area is not already mitigated. It doesn't get mitigated, right? We only want to trade from these areas once. And there's usually a liquidity grab prior to the impulse candle. Most times you'll use the candle right before the impulse candle to identify the supply or demand zone. But sometimes you may have to take into account the other candles in that consolidation or that order flow when you're setting your stop loss. Okay. So you can use that candle. You can use the lower wick of that candle to identify your entry if it's a supply zone, or you can use the top of the wick of that candle to identify your entry if it's a demand zone. But when identifying where your invalidation will be at, you may have to incorporate the other candles that are part of that consolidation or that order flow to determine where to put your stop loss. Okay, so I just want to make that clear. Now, here's a couple things that can happen with this market structure that can confuse you. Sometimes you may come to the chart, and this may kind of see may be the last thing that you see. You may see these moves up where you're kind of getting, you're getting a move up, then you're getting this change of character, then price goes right back up to the upside, and then it starts moving down, and you get another change of character. So you may get some things like this that will try to confuse you. So what you have to remember here is, let's say that the recent price action, right, here was bullish, right? Then you get this change of character. Now, a change of character by itself isn't enough to change that bullish trend because you actually need price to probably make that change of character, break of structure there in order to get to your supply or demand zone. So that's not, it's still bullish at that point, okay, but the trend may change. Now, what happens is it may, from that area there, price may then move up, and then it may, break structure to the upside to continue bullish. Could possibly do something like this. Now you get another change of character, but then it can move right up. So this kind of structure here is kind of bullish, right? Because although you get a couple of changes of character in this trend, right? You get one right here, and you get another one right here. You never really get that second break, right? That actually does give you a trend change. So what do I mean by that? Here's what I mean by that. So let's say price is moving up, right? You got this bullish order flow. Then you get this change of character here. Okay. Then price moves up, and then you get that break of structure to the downside. That's where where your trend bias now changes. Okay. So in order for a bias to change, right? If price is bullish, right? And then you get this change of character, right? Right there. You get that break of structure that we're going to label a change of character because it's a break of structure against the previous trend. Okay. Then you get a valid pullback and you get an actual break of structure to the downside. Now this is bearish. So now your job will be to look for a valid supply zone up there, right? And once price comes back to that valid supply zone, you get your confirmations. You think price will continue down bearish, right? So that's kind of what that looks like. So if you come to a chart, right? If you come to the chart and what you see is something like this, then you could see that the order flow is bullish. Now you may have all kinds of different price swings in these are your swing highs and your swing lows, right? Right. So price may do all kinds of gibberish inside of here and stuff, but price could be doing whatever inside of here, but those are your swing highs and your swing lows. And as long as you have that bullish structure, then you're looking for a demand zone to trade from. Okay. Now, again, you get that change of character, right? That's telling you that the trend may be about to change. But, right, even if you do get a losing trade in this area here, right, you still have another potential demand zone down here the price can get to next. Okay. And it could potentially, right, get to that demand zone and then move the other way. Or it can get to that demand zone, retrace, right, and then make another move down, changing the trend. Okay. So that's why it's so important you get to your chart that you know what you're looking for, right? Squigglies here. Okay, and if you see something, when you come to the chart and you see something that looks like this, well, it was bullish, right? Then it had a change of character that way, right? And it kind of comes to here, starts doing something like this, right? You really don't know, right? Right now, at this point, it's still kind of bullish, okay? But um, your demand zone is going to be down here because these break of structures are not valid to identify a demand zone to trade from if you're trading with the trend. Okay. Now these areas, you know, and so then if it moves higher, you could see you're bullish. And then if it decides to take out a zone here, and then you get a second break of structure, now you're bearish, right? Sometimes you get a market structure that you don't know what the heck to do with, right? Which is kind of like this. It's just in consolidation, right? You just kind of stay away from it. Here it looks bullish, then it starts looking bearish here, right? Comes back up. You have to be able to identify a clear trend. So that's all I wanted to clean up for you today. This is just a little update video to the supply and demand video I made earlier.